Hello guys, and welcome to my YouTube channel once again. So this video is going to be a quick one. We want to analyze one of these current pairs on the reef. This VIX 151S, and if you look at this pair, if you go to the daily time frame, you'll see that this month, this pair was added in the month of January. Let's check the weekly time frame. How many candlesticks we have? Okay, you can see we have about 1 2 3 4 5 6 7. So it's a very recent pair on the reef. So let's do a quick analysis so we can find an entry. All right, going to the daily time frame, we'll see the market has been creating lower highs and lower lows and finally broke above, and then we had something like this. Let's get the arrow line tool. All right, so you can see the market created a low here, a high, lower low, lower high. Then the market also created a lower low here. Then there was a strong consolidation, kind of around this zone. Excuse me. The market finally broke above it, then bought up to this level here on the daily time frame. All right. So now let's since it is a new pair, it doesn't have too much data on the chart, so we'll just focus on the we just have to go down to a lower time frame to find better opportunities, to find what we have, the structures we have there, and the current trend the market is on based on that particular lower time frame. All right, let's go down to the 4-hourly time frame. All right, so on the 4-hourly time frame, see what we have here, and we can see that the market has been creating higher highs and higher lows on this 4-hourly time frame. Currently, the market has been creating since February. It's been creating higher highs and higher lows. Then let's see if we can join this um, higher lows. Let's see if we can join them this way. Okay, or maybe we can just do it this way. Okay, we go by where we have most touches. All right, so this is okay. This is okay. All right, so then all right, so if you want to put another one at the top, let's see if we can find a very nice place to put the line. Let's see, we put the line here. It's not going to look good at all. It doesn't look good. So let's look for where we can have too many touches. All right, this is very perfect. All right, this looks very perfect. Then on a higher time frame, this particular structure here, what we have outside here will be actually a candlestick wick. This is going to be candlestick wick if you go to the weekly time frame. All right, so now based on this, we are just in the market was buying. You can see the impulsive buys from this point. See on the 4-hourly time frame, very impulsive buys. Then at some point, the market started creating lower highs and lower lows. You can see the lower highs and lower lows. What we have currently is this is the last low the market created, last lower low, and what we have here looks like the market is creating a lower high and would want to sell again to create a lower low. But let's place some lines to guide this movement. If you can remember my continuation strategy, you want to see stuff like this, a market which is actually buying. You want to see it create lower highs and lower lows. I mean, for a bullish market. Then for a bearish market, we want to see higher highs and higher lows. All right, so we have these lines right here, and based on what we have here, this is actually a candlestick wick. This will be a candlestick wick on a more higher time frame. All right, so if we go down to the 1-hourly time frame, we will see these things more clearly. Let's check the 1-hourly time frame. All right, so on the 1-hourly time frame, this is what we have. All right, so I do not have any need for this particular line. I can take it out and let this one be. All right, then you can see that this line we just placed is good. Why we are considering this line here is because you can see the market touched here. We have too many touches. This is the first one, the second, the third, the fourth here, and the fifth. So if we decided to adjust the trend line such that we have something like this, it's not really going to make sense. Although anytime the market gets to this trend line, whenever it does that, this particular position, there's going to be some reaction, but the best fit is actually here. That's why I decided to leave the trend line at that point. Then from here you can see the market has been creating the higher highs, the lower highs, and the lower lows after an impulsive move, after an impulsive buys like this. So in that case, what are we looking at for? It looks like the market is going to sell again. Meanwhile, there's a strong zone I can identify right here. I can identify a zone from here. You can see this zone, very nice zone. This is zone market has been selling and buying from previously. mostly sells. If except I try to extend it, if I extend it like this, it's going to accommodate the way the buys also started. But I don't like drawing my zones to be too large, so I would want to concentrate on where I'm focusing on, which is actually the sales aspect of it. All right, so you can see that we had some nice sales along this zone. You can see there was a buy here, sell, um then sell here. You can see market broke to this zone, retested with this bullish candlestick, then sold. So we still have another sell about to start right here at this point. And looking at this, we can also confirm by bring out if I bring out the Fibonacci retracement tool. Let's see where the market is at that point, the price is. We can see that zone is actually at the 61.8 percent of the Fibonacci retracement. You can see this zone is at the 61.8, meaning the market is at a premium area or premium zone, which means it should be selling to the downside. It should be moving to the downside from where it is. All right, so all you have to do is just to wait for some confirmations, then you take your trades and sell nicely. In that case, you want to wait for, you are expecting the market to create lower lows, so the market will be selling nicely and nicely and nicely. All right, so let me take out this Fibonacci retracement tool. Sorry, I even duplicated it. All right, okay, so with the what's the minimum lot size for this particular pair? The minimum lot size is 0.2. So with the minimum lot size of 0.2, all we want to see is if we are taking a trade, because I would probably wait for the market to pull up to this zone here before I take an entry. If the market can buy up to this zone, or if you have a good account size, you can decide to enter where the current price is, and your stop loss should be just somewhere around here. Now you'll be risking about $9 or $10. Then your TP, since we know the market is selling, we are expecting it to go below this zone, this low here, the current low here. So even though you're taking your profit at the current low, you're making about $26, risking about $10. All right. Then I'm expecting the market to even go below this because the market would want to create a lower low. We are expecting the market to create a lower low. Then it can sell up to this level where we have a bullish order block right here. So if it sells to this zone, you'll be able to make at least $40 in profit, risking about $10. All right. Else, if you don't want to enter at this the current price, you might want to wait for the market to pull up to this level, maybe close to the zone again. With the those of us that understand the engulfing candlestick setup, you can wait for the market to do that. Then you'll be risking less than to make more, and you may need to go down to the 15 minutes time frame to confirm. If that happens, then you see you'll be making some. Wow, it looks like the engulfing candlestick already played out on this particular time frame. And also you can see the structure we're having here on this 15 minutes time frame, guys. You can see the structure that looks like a head and shoulders pattern. This looks like kind of a neckline right here. At this point, market bought impulsively, then started creating this structure here. This looked like a left shoulder, this looked like a head, and this is the right shoulder. So this is actually a neckline, and the market is about to break and close and continue selling to our destination. All right, our take profit. So all we have to do is just to follow this analysis. I don't know when you're going to see this video. If you see that it had already played out, you just need to try to apply this approach to analyze any kind of chart that you're seeing. Try to apply this, analyze the chart, and you'll be able to make some good profit on a regular basis. All right, you'll be able to make some good profit. Meanwhile, let's see. I think we have because we can easily join trend lines to mark these higher highs and higher lows that the market has created. Let's see what we're going to have. All right, if it makes sense. Let's see if it makes sense. All right, let's see if it makes sense. All right, okay. So we have something like this. Impulsive sales from the left side, something like this. We have this impulsive sales from the left side. The market bought, then it's coming back down to sell to the downside. This one is not really important at the moment. What's important is, in case you're not sure where to even enter, you might decide to wait for the market to break below this zone where it's been buying from, like this consolidation around here. You can just wait for the market to sell below this zone. Once the market sells below this zone, you can take an entry and allow it to run. You make so much profit. If you can just wait for the market to break below this zone, it's okay, in case you do know where to enter here. All right, so there are so many opportunities to on the chart on a regular basis. You just need to understand what you are doing and how to go about it. All right, so subscribe to my YouTube channel. Share your thoughts in the comment section. Like this video, guys. Some of you are just watching without subscribing. Please just subscribe and like the video, all right, so the algorithm can also share this video to others who are interested in learning valuable getting valuable informations like this. And if you want to enroll in my one-on-one mentorship, there's a link in the description of this video. You click on the link, it's going to take you to my Telegram channel. From the Telegram channel, you'll find my direct contact to reach out to me for a private mentorship. And I will really strongly recommend this for whoever is very busy and is not will not be chance to enroll in the batch of mentorships we usually have, the batch mentorship, because I decide the time. But if for a private mentorship, we try to look at the time as it favors you and look at your convenience. All right, so you reach out to me and we proceed from there. Meanwhile, I'll see you guys in my next video. Stay blessed. Peace out.